Okay, everybody, welcome to the European crossover webinar. And we had a pretty good, interesting day yesterday. Obviously, the ECB disappointed. Obviously, you can see in this headline, this is a story off of Reuters. Obviously, the key thing was the ECB deposit rate cut, an announcement that it would extend but not increase its monthly asset purchases, disappointed markets and led to the surge in euro, higher bond yields, and lower stock prices. And I was expecting a rally, but I thought that we would, that Draghi would come through with the increased purchases. And obviously, the rally got pretty overdone. We were pretty active, and those that follow me on Twitter, I was posting my trades, or not all of them, but practically all of them, throughout the day, and it was probably one of my best days in the market. I probably could have pressed it, probably should have gone and pressed it, but like I said, it's probably one of the best days I've had in the market in a while. Obviously, because of the volatility, just dancing in and out of the market. And using on shorter term or on ultra shorter term trades, using my ladder to go in and get in and out. That TT ladder is pretty good. I'm starting to get pretty decent at it, but I'm still keeping it defaulted to 1 so I don't screw up, because I can always increase the volume in case I accidentally push a couple of buttons. I don't want to be short 5 or short more than that when I don't even know and not realize it. But I've had a few mistakes using the TT ladder, but looks like I'm starting to get a little bit of the hang of it. So let's go on and move into the charts, and also we'll look and see what we got coming up on the docket. Obviously, the big thing is going to be NFP. So hang on. So here we have coming out of the box right here. ECB Smith says ECB sees renewal of inflation, but more slowly than previously thought. Sees signs of improvement, certainly in terms of economic growth. I don't think any of this stuff is, obviously I'm going to make that much difference. Belgian central bank sees Belgian budget deficit of 2.9% GDP. Obviously here's what we got coming across the news, in energy, and obviously we're going to have the OPEC announcement today. We're moving higher. We're definitely moving higher. But I think this is really, as I shared with the trader yesterday, this really has more to do with the weakening of the dollar than anything else. Weakening of the dollar allows the crude oil to go and move higher. I did not touch crude at all yesterday. I don't intend to touch it till sometime next week. Let's go on and take a look at what we've got on the docket. Here with NFP, the prior was that blowout number that was just fantastic. That's 271,000. Obviously, the key thing will be if we see upside revisions, it's really going to be ridiculous, ridiculously good. They're expecting Reuters polls 200,000. I really don't give an A about the private payroll stuff. It's like the headline print is what's really going to grab the attention. Manufacturing payrolls expect to lose 1.0. I think people are making too big a deal over these manufacturing payrolls because obviously as crude's weakened, we've lost a lot of manufacturing jobs that to a certain extent are related to that. So I don't see this as being such a big harbinger of a recession as a lot of people have made this out to be and have basically extrapolated out from the ISM that this is going to lead to a recession. And I just don't really see it. I'm not going to discount what those people are saying. I just don't really see it for the most part. Unemployment rate's 5.0. Obviously, it'll catch a headline if it ticks down to 4.9. Probably that's not going to have it. What's going to be key is average hourly earnings of prior month. This has basically sealed the deal. And the people that kept saying the Fed wasn't going to raise, these are the people that really don't know what they're talking about. And even there's some big traders that I've seen, CNBC, and I don't see it, but I mean, I don't watch CNBC. I watch Bloomberg when I do watch it. But I've seen, where they've had like little blurbs or whatever. And this sealed the deal here, this 0.4 increase. as far as seal the deal in the way the market was going to go and price it in, just like I told you before, is it doesn't really matter what you think or what I think, but you have to look at how the market prices in the risk then. And so these people really just didn't even know what they were talking about, because this basically sealed the deal with the idea that the Fed would be raising rates, and that's what counted, obviously with the expected action with the ECB. There was a disappointment. But that's what counted in moving the euro from 109 all the way down to the 105 and a half. That's what I'm saying. Once you get to the actual event and what happened, I mean, you could go and look back and say, well, I thought, you said that they were going to do this and that, and ultimately they're disappointed. Yeah, but where was the euro at 109? So if you want to wait till the actual event to trade it, then you're gonna miss everything. So that's what I'm saying. You have to look at the data as it comes out, and how the market is going to price that data going forward. I'm saying, like we talked about that I brought that up before, the October release. I don't mean the actual October number, but October data, but the October release of the FOMC minutes, and that sealed the deal when the euro was above 110, and nobody had a chance at that moment to go in and get short. But I said the big hands were getting short around 950 to 930-ish, basically 960 to about 935, and that they would go on and hang on. So because that sealed the deal that we were definitely going to go on and potentially going to be raising in December, and that sealed the deal for the euro and the dollar to go on and strengthen. So this is what happened here with the wage gains, average hourly earnings. So they're looking for 0.2. If we get a 0.3, that's probably like, forget it. It's all over, done with. So that's about it here. I really don't care about the part-time employment. You're going to see all those idiots always come up about, oh, there's this many in the participation rate and all this other crap. It really doesn't count when you're trading. That's what I'm saying. If you want to go and talk over, stuff afterwards, that's one thing. But these are for people like that idiot Santelli, who I used to respect, that he's worthless. He's just some old geezer who doesn't know a damn thing now. He used to be good, but he's not good anymore. So let's go and move into the chart, see what's up. I moved all these charts around all over, but it's made it easier for me to trade, but I've got everything all discombobulated and all over the place. John says, good morning, Paul. Thanks as always for the excellent insight you provide. One question I had was, should we get a strong NFP? Will this remain dollar positive? I'm actually out of my euro, and I posted my trades, and I posted almost all of my trades, and I even posted the last one. Remember, I got short. Let's talk about the euro. Remember, I got short at 922, and I think for some reason I kept saying 921, but anyway, it was 922. And then remember, I added on, and this is that area I was looking for. We'll kind of scoot this over. We don't need to go that high up. It just makes it harder to differentiate or whatever. Scoot this back. So, and we're talking about the last trade. Okay, so I got short at 921 because I was looking at this 922 because I was looking at this 929. Okay, and I think it was 922. Maybe I really don't remember at that point because I was despite the trades I was tweeting about, I was darting in and out using that ladder. And that ladder is pretty fantastic. I'll tell you what, it's taken me a while to get used to it, but it's pretty doggone good and a pretty fast market. And so the next, we did get that dip. Oh, that's right. I got shorted. Oh, I did say, I tweeted out, I added it 934. So I covered the 934 at 905, and then I was hoping for this to break a little bit lower, and it didn't. And when it rallied higher, this is what I was looking for. I was looking at 960. I even forgot about that 934 short. But anyway, so I was looking to get short here at 960. I tweeted out that I was selling it. I even said that wave down here. I said I'm a seller. I'm a seller at 957, and then we did move, and then this is what I was looking at. And I didn't even mark this originally, and I said, you know what, I'll just mark it nonetheless, because I had the 61%. There's no way in hell I thought we'd make it up here. But when we got up here, I was really concerned even adding on some more. But I was like, you know, what if it was to act really stupid? I know that, and to be honest with you, I don't even remember my tweet. I think I said I was looking for 984. If I remember correctly, I said, I think, but this is way down here. I was saying this market's run out of gas at 984 because this is the bottom of this range. I might have said 980, but to be honest, I'd have to go through all my tweets. I tweeted so much yesterday, which I'd gotten out of doing that, but this is the area I was looking for. Now, what's his name? Andy got short. He actually got short, I think, at 973, basically top ticked it. I think maybe Remix Trades may have done the same thing because he was looking higher. I think he may have got short himself, even though I think he was playing this from the long side. And I was only playing from the short side. I had one of my best days. But anyway, so in the Asian session, I did tweet out that I got out, I think in the 957, I think I got out like in the mid 920s. And I said the other one that I was still short my original, which is 922, I would hang on. And I was looking to get out at I think it said 877 or 872. And I'll show you where I came up with that. And then we'll hurry up and get into the rest of the stuff. But anyway, that gives us a perspective of where we're at. So the way I have my chart set up, as you know, I'm pretty limited to the markets I trade now. I'm not trading very much. In FX, I primarily just only trade the euro, although I follow the dollar CAD and the dollar yen. I don't look at any cross rates whatsoever. I don't even trade the cable at all. Don't even look at it primarily, and I do look a little bit at the Aussie dollar, but I just don't trade that anymore. But I've got my fibs up because it makes it easier because I look at the two different time frames, the 2 hour and the 30-minute, and then on my other screen I showed y'all, I keep the 5 minutes for the crude and the euro. But I keep this, which yesterday was perfect. I keep this up for when the market gets moving fast, I can just jump in and out and set these, which we call fibs. So this is where I came up with that level is, I guess we topped out at what, 980, 982 appears. So this is what I was coming up with. The 23% was 872. So I hung on the one from 922, the initial from up there, I covered already. And to be honest with you, I think, well, I was looking at, I was considering 867, which I guess I could have really done exceptionally well. But I think I put my limit at 72 or 77. I really don't remember. I'd have to go look. All I know is when I woke up, I was already out of the trade, and I'm flat. And that's what I said was that I was telling y'all yesterday. I said that on a good number, because I know Remix Trades was looking for higher, and technically we talked about that. And well, I mean, we want to focus on what's happening, but we'll discuss on why I thought the market was going to move higher, and as we move to these higher levels in advance, and we're going to get to that. But I was saying is I really didn't want to do too much. I'd rather let the market do what it wants to do in NFP day. Maybe I'll trade it. We'll see. I just don't really. It's been a good day. I don't think I should be putting myself in harm's way. I feel more comfortable selling the euro, but technically it's on a buy. So I was saying that on any on a good number, that I thought you wanted to go in and cover. And so I thought if I'm still stuck in this one from 922, then on a good number we come down here to, I think it's on 869. We're looking on the, I'd be getting out. Well, we already came down here, so I'm already flat, and I'm not looking to do anything on a good number. I don't. Here's the thing: is the theme is already flipped kind of the other way. And it's also the end of the week. So you think about it, people aren't necessarily putting on new positions to turn around and go back the opposite way. Because everybody that got screwed going this way, and wow, I can't wait to get a fantastic number. Now I'm going to turn around and re-add my short. They're probably in all likelihood licking their wounds and saying, okay, I'll come back next week. So, I mean, you'll get movement, and we could see some decent volatility, but I think the most you'd see is something down here at 8. But I think that the market is more set up for a rebound back for the euro. Although this rebound, if we get a good number, it'll have to see how, if we get something like 330,000, I'm not calling for that, but if you get something like I'm calling for 243 on those NFP guesses, Twitter NFP guesses that the Stalwart puts out. But if we were to get something like 300, yeah, then this market's going to flip and go the other direction, not completely, but we'd probably be coming down here at 760, and then we'd dance around up here. But I think for the most part, it's going to be. Here's the deal. I think that eventually the euro will come back down, but for right now, it's basically let them have their way, and that's the way you got to go on and do it. So any moves down here, if we get a pretty decent number, will probably come right here, 823. That's where you'd be looking. You see we got this touch right here, this close here. Hold on. You see how you got the market rallies up here and it closes right here, which is right around 823. See that on the right side? See it right here? Look. See it right there? 823, right there. Right there. Okay? So it rallies up here and closes at 823. Then the next bar opens at 823, which I guess isn't saying too much because it opened and closed. Boom, boom, close and open. But it only rallies just up a hair and comes back down. And then look where the market rallies up here on the next bar. And these are half-hour bars, so it's not like it's a 5-minute bar. It comes back up here to this 823. So I think this is where the market could come down to potentially 823, 824. Right here we have a level marked off. Obviously we get something crazy like 330,000. This market's on frickin' fire then. I'm talking about the employment market. So yeah, then we'd see something beyond that. And I don't think, you know what, I think it's better to wait till after the number, because this way you're not like yesterday when I came in, I said, I'm probably not going to be trading this. I'm going to be sitting on the fence. Because if you come in with that neutral bias, you're more apt to adjust to the trade a lot quicker. If you come in with some preconceived notion that the market's going to do this and do that, then you're like trying to figure out, well, wait a minute, I thought it was going to drop down to 814. Now it's at 776. I'm not really sure what to do. Should I be buying it maybe because it's so low? Should I sell it? But maybe I'm selling the bottom. If you come in more neutral, then you're going to kind of let the market do what it wants. And especially on NFP day, this market can get kind of wacko. Although I think that because of the volatility that we saw on the way up, it's disrupted a lot of trading. And don't listen to those idiots that don't know what the F they're talking about, all this. Because I did see where, what's his name, McGeever or something like that. Anyway, he was saying that what he was hearing, not him, but what he said he was hearing the talk of the day for what he called the carnage was all about position. These are just losers that don't even know what the F they're talking about. I'm not talking about him. I'm talking about the people that have no explanation. Oh, it's all about positioning. It's probably because you don't know what the F you're talking about. You couldn't trade your A out of a paper bag. But like I said, it's better that you come in with a neutral perspective into the NFP and say, okay, let's see what you do. Kind of like the Jay-Z song, show me what you got. And that's the best way to go on and best way to go on and do it. Really, to be honest with you, is just don't come in with any preconceived notions. Just say, the key data that you're going to be looking for, we'll switch back into that. Let me see. Hang on one moment. Here's the key data that you want to be focused on. Seriously, that's why I'm jumping back here. You want to focus on here, the 200, right there, the 200,000 is what they're expecting. Right down, the prior month was 271. See if we see any back month revisions. Obviously, if we see them positive, oh my God, this is like freaking over. And then obviously the wage gains. And we had a blowout number the last time. It was 0.4. They're expected for 0.2. If we get 0.2 or better, if we get 0.2, that keeps the pressure on. The Fed's definitely going to raise. If we get 0.3, it's already done deal. It's over. Game over. That's it. But we'll see. Those are the two numbers you have to go in and key in on. So if you just focus on that, don't listen to idiots like what Santelli, some old fart's got nothing better to do, ought to be sitting in a bingo parlor, about his crying, on a crying jag about the participation rate. Those losers aren't going to make you any money. Thing is, the guy used to be a fantastic trader. Now he's just some old codger who doesn't know what the hell he's talking about. But anyway, so let me just go on and move back here. Okay, so let's go back to the charts. I don't mind people bitching, but when they can never admit they're wrong, like Santelli, that really pisses me off. But anyway, so let's get back to the charts here on the 2 hour. Doggone it. We don't want to focus about too much patting ourselves on the back, what happened yesterday and all that. I just kind of want to set what happened, and that kind of gives us a good direction of today. Because, the euro was the frickin' bomb to trade yesterday. Just frickin' awesome. So this is how we kind of want to, stay along those same lines. And let's set ourselves a game plan for today. But I'm really trying to keep it light. Joe says you're trading today. You can't help yourself. I'm gonna try. I'm really not interested in really trading today. I mean, it sounds kind of stupid in a way. Yesterday was a fantastic day. I just don't. Unless it hits. Here's my idea, and I think that's a good way to think about it. Honestly, even if you are going to be trading, if I see my levels that I feel good about, then I will. The problem is, I think that the euro is definitely on a buy, and I don't feel comfortable buying the euro. And I really don't want to be day trading it for the long side. But the move is higher. Like Remix Trades was looking at the same thing. I mean, well, actually, he's the one that was more bullish. And I think Andy was bullish, but he was selling it up here. And so the way we want to look at it, and not only from technical standpoint, because this is how we made the money, because we really weren't trading it straight up from the technical. We were looking for a rebound, but we used the technicals to advance ourselves higher. Like when we got past the 756, and remember I told you, we're going to 869. Remember I said, we're going to 869. I go, if we can get past, remember we were down here, and I said 819, and this stopped the market dead in the frickin' tracks. It stopped at 819 to the pip. And then we backed off to, I think, the 780s, and then we reasserted ourselves, like, if we get above 819, I go, it is not going to stop. We're going to go up to 869. And then, obviously, we went past 869. We came back, had a pretty wild volatility, and then we reasserted ourselves. And this is really, I think, more about people that got short too soon, and the market started to squeeze, and that's what this whole area about. Let me go and show you here. And this helps you for perspective the next time. And I'm not talking about the next ECB meeting. I'm talking about when you see gigantic moves. So the market was oversold, blah, blah, blah. We got past the 756. You remember we were shorting 756. Remember, this is when I said, hey, look, the market's really overdone. I think that you're seeing a lot of big hands covering shorts. I said underneath the surface. And sure enough, we got that good rally. I was looking for 756. I actually ended up getting short on the way up at 743. It got up to 763. I should have shorted at 757. I didn't take the trade, and the rest is history. Although I thought we were only going to work down a little bit and make one more move back up here. It just never came through. So here's the deal. What happened here was when people got short too early, and the market had rallied, but this is why I mentioned to Blake yesterday. He's like, I go, the euro's higher, but it could be higher. And he goes, are you kidding? It's up 250 pips or something like that. And I go, but if you look at it in the context of where it was, that's why I didn't think it was that big of a deal yet. And this is where people got effed pretty good. They thought this area was a big deal. And so they loaded up the shorts. And this is what I was saying. I go, I don't think it's rallied that much. And Blake was like, it's rallied 250 pips. Are you kidding? But yeah, from the bottom, but in the context of the overall price structure, it had rallied a lot. So people had got super, super short in here thinking, well, we're already up 250 pips for the day. But they didn't understand the structure of the market that this thing could launch, because it's kind of like the old saying, the dead cat bounce. Yeah, the cat bounced, but he only bounced up to maybe like like 20 feet after he fell from 200 feet. So that's what I'm saying. When you look at it in the context of the overall price structure, check this out. Down here, we hadn't rallied that much. We did rally. 250 pips sounds a lot, but the market realized that and started squeezing, and then these people got run over big time. So that's what was happening here, and why we were able to go and launch, and why you had to go in and be nimble. So that's what this was people jumped in and got short. They saw this 819, and that we called that perfectly. But they loaded the boat here. But when you look at how they were looking too much, they're focusing too much on the lows. The area they needed to be focusing on, remember what we have been talking about? Let me see where this is. Hold on, I can't remember. I think this is it. This is the area they needed to be looking at. Remember, this is where I kept saying in 626, I go, the big hands, you're starting to see some short covering. I go, you're seeing short covering, and it's underneath the surface. So this area down here didn't really count, and people were acting like it was a big deal. And so this was basically nearly 75 pips. And they were giving too much credence. It was about this area here. So when you looked at it, how far were we above this area? We were above this area about like 75 pips. And people got loaded the boat. And then the market started surging. And once it surged, these people got run over big time. That's why the way this move came out, and a lot of people didn't understand it. But anyway, so now you got that. And we already know, so now at least you have like, okay, now we figured out kind of like what happened. Now where do we stand? So we got this move up here, and to me, I think the move pretty much is over. And I was saying is, I go, the move's going to be over by, I think tomorrow, which is today. I go, if it can extend it, I think it's over by tomorrow. I go, they may stretch it out to Monday, but I don't see much left because they've come so far so fast overall. It's too far too fast. But I think any pullbacks would be bought, and this is going to be, remember the 819 stopped the markets in its tracks. So let's take a look at this on a 30-minute chart. And I'm really more focused on the euro today because I didn't focus on the SPOOs, and we'll take a look at that. We did get to that 2104. We did pause. I thought we'd move higher, but obviously the ECB disappointed, so that basically pulled a rug trap on the market. Here's a move to 819. I'd probably have to pull it up on a 5-minute chart, and I don't want all the charts to get all screwed up and disappeared. But we made it to 819 on the initial run, and the market pulled back into the 780s. And obviously, then we launched up here. So I'd be looking at this 814 as your marker. So let's go and mark this off as a bias pivot. Let me go in and try and pull it up on, I don't like, every time I try and move these charts, everything disappears, and I don't want that to happen. So let's go and take a look at this. Let's see if I can pull this up on a, I don't think I even have 15-minute on here. Hold on. Okay, on TD Ameritrade it says here was 817 was the high. On what I was looking at, my quotes, which are coming directly off IQ feed, was 819. But my dad used to say Mox Nix. So this is where the market got up to 819, and God, this is on a 10-minute chart, but I know we pulled back to like the 780-ish, so maybe this must have happened like within 5 minutes or something like that. Let's see if we can move this down to a 5-minute chart. Okay, here's that move. You see, remember I told you? So here's that move, and I have it as 819, but whatchamacall, TD Ameritrade has it 817. So it pulled back, and it pulled back to 782. You remember? So I've got an excellent memory. So I remember this, and I had that marked off. So from 819 to 792. And then of course we gathered ourselves and we launched up here, and then we came back down and look where we found support down here. You know, at here we go at 819. We found the support with 791, and then we launched up. So this area right here, and I have 819 was that area. This is what you'd focus on, 796. So the move, the bias pivot I have is 819. We'll probably make it, we may come down here as low as like the single 08 or come down to 795 on a pretty good, decent number. But let's go and move this back. Technically, the euro's on a buy. Now here's that 795. They did get a hair below that 795. And let's take a look at this on a fib. Actually, we already have it marked off. So 804 is going to be the 38%. You see that here? So an overshoot of that, maybe we take it. Remember what the low was on our first move to 819, and we backed off? It was 782. Because I remember, I can't even remember my own self. I'm pretty sure I got short right before the 819 because I was looking for that. I don't even, like I said, I did a whole lot of trades. I mean, I shared trades, but I didn't share all my trades. I mean, because some of them were just like real fast scalps. But this is the area you'd be looking for on the low side, this 796-ish area. The thing is as long as this market holds at 38%, it's still in a bull market for the most part. And that's what I'm saying. Going into the weekend, no one's looking necessarily to take the other side of the euro. For day trades, yes, but I'm putting on position. So my guess is any pullbacks down to here. Think of it this way. Let's say that you always Blake always makes a good point. Put yourself in the mind of the other trader. So let's say someone got short here at 819, or let's say they got short 828, 830, and they're like, this is a bunch of BS that the market went up, and so they're still short, and they're like, this is crap. I don't believe in this. There's no way. The dollar's going to the moon. Blah blah blah. So this person's saying, well, on a good NFP print, and I think we're going to get a good NFP print, this market will come down. But once this person's in the black, so maybe they're short from 828, 830, 835, 845. If they get down here and they're up 45 pips or 35 pips, they're getting the F out the door. So you're going to have people that are saying, wow, we really got to move up in the euro. Now can really get some legs. And they're going to be trying to buy down here. Then you have people that are short. They got short and they're in trouble. And they're like, I'll buy it on a dip. This is stupid. I can't believe the euro's up here. I mean, I told everybody, look, we're already 100 pips off the highs. This thing's going down. It's silly. But as soon as they get back in the black and they're up 25, 35 pips, they're probably going to say, well, these people are idiots, but I'm going to take my short off now. So that's what I'm saying. Why you want to look for the area, and it's going to be, this is going to be your value zone. Let's put it in here. I believe this will be your value zone. Doggone it. Okay, that's gonna be your value zone between 795 and 819. That's where, on a good number, that's where you want to pick it up at. Or that's where you want to be covering your shorts. I just don't want to buy the euro. I never bought the euro one time yesterday except for covering it. And I had one of my best days, and I don't even know when. But, I mean, I probably should have gone and bought it when I knew it was going to go to that next level, so that's probably pretty stupid on my part. I just didn't feel comfortable buying the euro. But if you're trying to play from the short side, this is your value area. So you're probably going to see something like this. If we get a ridiculous number, like 375, those levels will hold. Those levels, it's still about the levels, but you're going to see some crazy A trading. But it's probably going to be something like this. This is probably what you'd see. Post NFP if we get a pretty good, decent number. Oh, Andy said if you take the trend line from the 13th of March and the 13th of April, 2015, you will see a rejected right at it. Past it will retest, I will get bullish. And Andy's looking at the daily. Yeah, it's, and I think Andy offering that, in a sense, hits it on the head of what I'm thinking about. I'd rather see today play out. I mean, the market doesn't close forever on today. You know what I mean? I just think that you're putting yourself at risk trying to. I think you have to be traded from a more neutral perspective. I mean, Andy, I don't know if maybe he's still short. He added his short or last short at 973. I wanted to add it up there. I was going to add, and I had already pointed this out. I wanted to add here, and actually I probably should have, because I thought about it. I go, well, you know what? Add it, and if it starts to take off, your last add, just get out of it. Take a small loss, because we were up against this 984, and that was my target, and I didn't think the market would go. I never thought we'd get to that target yet. I thought we'd get to this target like on Monday or Tuesday. But this is what I see happening here. So you're probably going to see buying of the euro down here. Now, obviously, if we get something like 376,000, forget it. We're probably going to be we'll be testing 756 down here. We'll get past it. And then I still think that the people will be covering their shorts and buying the euro, but we'll have to see how the number comes. And I think it's better for you to trade from a more neutral perspective, kind of like what Andy's saying, in the sense that, okay, Andy's looking at it from a perspective, well, it rejected that trend line. To me, it's more about the zones. That's how I trade. It's all about the zones. The market's going to respect the zones, and these are the zones. It's the same way I said. We get past the 756, we're launching, and I said we're going to 819, and we stopped dead on the tracks at 819, although TOS has at 817. Then I said, hey, when we get past here, it's not going to stop at 840. We're going to 869, and I think I had my limit. I guess I don't remember. I was jumping in and out so much on this. I think I got shorted 872, I think it was. I really don't remember now. But I think we were still on the air at that time. But it's better that you look at it in that sense. If you want to trade more effectively, you have to look at it from the bull side and the bear side, although sometimes I'm rather opinionated. And that's good to have, where you have the confidence, and I don't mean confidence in a good way, a bad way, but I mean confidence that you believe in your trade, and that way you're more confident you're not going to get shaken out because of market action. But I think it's more important to trade this right now from a more neutral perspective, because the NFP is, like they say, the granddaddy of all reports. But we did get that disappointment from the ECB, and we saw a major reaction. So, and it's a Friday. So anybody that's bearish the euro, and me, I realized that I thought we were going to rally, but I thought that the ECB would come through. But I thought we would still rally because I thought the market was really overdone. But I think that I don't particularly care for being long the euro, especially up at these levels, because I think you have to let the fireworks go, and then after the fireworks, there probably won't be much left. So and like I told you, I expect a lot of volatility from here, into January. And I thought that the euro would be still under trouble. I thought it would rally, but not like this. And then I thought eventually we might come up to the eights, and then we'd work lower going into NFP. And that's what I said. It's good to have a scenario, because that way, even if it kind of gets bent, you can say, wow, if it didn't do this, then let me think about what it probably can go on and do. And that's the way I see it. So that's what I'm saying. I'd really rather trade it more. I'd really try to trade it from a more neutral side. And Andy makes a good point. If it breaks above that, then it's going higher. I don't believe in it, but you know what? I'll tell you what. I'm not gonna ignore it. So that's what I'm saying. And for me, at least, I'm going to be more neutral today. I'm not saying I totally won't trade, but I'm not going to be looking to go and trade. I'd rather watch the market action, and let's see what happens. That way I can come in fresh on Monday, and if I had to buy this thing, I'd have to buy it. But I just don't feel like being under pressure. I'd rather watch the market unfold. Because yesterday was such a huge day, it sounds crazy not to trade NFP day. You know what? I did exceptionally well yesterday. I had my NFP day yesterday, and because we've had such a huge rebound here, I think there's just too many question marks in my book. Keep going in. But that's where we are here on the euro. So let's move on to some other markets. I'm not going to take a break today. But I thought the euro, it's really treated us quite well yesterday, and I expect it to treat us quite well again, because so much of it is going to be based on a dollar trade, on the perception of what the Fed may or may not do, which I do believe that they're going to be raising in December. So obviously I think this is the key market to be trading. Let's go on and move in to, crude's already rallied, but I'm not, well, we'll go and take a quick look at crude, but yeah, I mean, I'm not doing anything, and I looked at the volume, and the volume is well, actually it's improving a little bit more than it was. Actually, the volume's starting to improve compared to the way it was about an hour and a half ago in crude, but we'll just take a look at it. But I'm not doing anything in crude until after the OPEC meeting. That's not going to be, I won't do anything until next week, so let's move into that real quickly, and we'll take a look at gold. James said, Paul, I usually can't make your sessions. Are all the levels on your chart manually drawn by you? Yes. Yes, I draw all my levels and those zones that I talk about. This is the way I came up with these zones. I showed it yesterday, and I just look where there's the most touches. You see what I'm saying right here? And it makes a huge difference, because then if you're just looking at it as a blank and you have these levels, see, this is where I've done quite well in different markets. I mean, obviously you see that a lot with the euro, but where I'll have these zones and I can see the market. You see, it tells me something. You see what I'm saying, on the way down here, and then it becomes a high. Then now it breaks through it, and it comes towards the bottom here, which is now the top of the zone. It gives me a good, I'll tell you what it does. It gives me a perspective. And that's all you can ask for. Because in my trading, I always tell people, I trade just the levels and Fibonacci. And obviously price structure. When I talk about price structure, it's a pretty good example of what we're talking about the euro dollar, and how a lot of people got fooled yesterday because they were looking at it from just like, oh, well, they're looking like below 105 and below was like real. And it was real because it traded there, but I'm saying the real volume or what was actually left at that level, there really wasn't that much. And that's why those people got crushed yesterday. And my point was it was much higher. And when you look at the zones give you a story, and to me, it gives me perspective. That's why lots of times you saw me, I've been talking about this 41.79. But anyway, here we are on the crude oil, and the reason the crude is working higher is because the dollar is weaker. Now, it doesn't look like OPEC's going to cut, although they might provide some, I'm trying to think of the right word, but anyway, they're essentially going to provide some words, though, to try and make it, they could try and, like I said, put some lipstick on that pig, but they're not cutting. So they'll probably talk about coordination and stuff, well, a bunch of BS to try and help the market. But we'll probably dip back, and then maybe we can assert ourselves if the dollar continued to weaken a bit. But I think that the best that this market could, obviously if it breaks above the 41.79, we could work higher. But I think that the best that this market will probably hope for is for a peak above 43.56. And we can take a look at this on a fib also. Here's the last swing high. And we got to our 39.88. So we've made it to the 23% right now, and that's where the market struggled at. Look at that, right to the, almost to the pip. You see that? 41.84, that's the 23%. And notice how the market pulled off. Decent amount, not a whole lot, but a decent amount. So let's go and move back in here. You see right here, this is marked off as a 38%. The 38% comes in at 43.09, which you've got resistance at 43.11. If this, I think the best this market can probably do is 43.88, which it pokes its head above 43.56. Now I'm not saying get short at 43.88, but I'm saying is this is what you'd have if the dollar can continue to extend its loss. I mean, we might be a little silly and get above $44. We might get right there, but the bias pivot, and we've done really well during the summer months on the webinar. We were just freaking killing it. That was in the early summer months, and I kind of got away from crude a little bit because then I forgot what I was doing at the time. But early in the summer months, we were doing really exceptionally well. But this is the bias pivot right here, 44.92, and you can see how this market has reacted. I mean, this is only in September, so you can't. We'll put this up on a 4-hour chart. This 44.92 has worked like a freaking champ. You can see right here, one line here is bombed out here, but you see down on the way down here how this 44.92 is basically flipped the script. Every time it gets above it, the market takes off like a scalded dog, and gets behind it, and bam, it's going south of the border. Then gets above it, once again, going to Venus. Then comes back down, we fight, same thing, you start to accelerate, and that's how it's been. You see here, on the way down here, from 50.67, before it gets there, we have a size bounce, and then all of a sudden we come down here, we bounce again. Once we get back under 44.92, we have a nice sell-off, we rebound, we run out of gas at 44.92, and then it's south of the border. So you can see how significant this 44.92 is, but we'll have to see what happens out of OPEC, but it really doesn't make a difference. I mean, OPEC at this point has been neutralized in my point of view. This is all about the dollar, and what the dollar is going to do will dictate what kind of run you can get here in crude. I mean, there's going to be a lot of stuff said, but it's not really going to count. So someone asked me yesterday about the dollar yen, and I told him, and I've been saying, be careful with this dollar yen. It's, I think it's going to go higher. The Bank of Japan, I think they're going to announce additional quantitative easing in January. And when you look at what the SPOOs have done, and they really took a hard hit with the ECB disappointing. And I think we could have come up to this 1475, but this is why I thought that you're going to come here now, you can see a sizable pullback if we got this 1475. And we talked about 425. This is the earliest you could step in to scalp it. And I thought, it's going to lose a little bit, but not that much. And initially, that's exactly what happened. Pulled back 3 handles, and then it came back up a little bit. But they were really counting on the ECB to do something. And if the ECB would have extended it, that would give them that extra juice to take it a little bit higher. And that could have got us up in here. But obviously the ECB disappointed, and it was Katie bar the door, and all hell broke loose. So, but here's the deal. So in that situation, you'll see the yen itself appreciate as a safe haven currency play. And so, which means the dollar yen would weaken. And don't forget, the dollar sold off yesterday. And here's the dollar yen. So this person was asking me, do you see 121? I'm like, no. I mean, if the yen can't strengthen when the spoons get kicked in the groin, and on top of that the dollar sells off, and here we are knocking on the door of 120, not too far from 123, you've got to be smoking crack if you're trying to short the dollar yen. Seriously, go to rehab. Makes me think of that song by Amy Winehouse, Going to Rehab. But anyway, yeah, I would not be shorting the dollar yen. We've been, telling you about that. And dollar CAD, it's doing a whole bunch of nothing. And I just don't see it. There's just nothing happening here. You see what I'm saying? And if you're playing the crude play, you know what? Trade crude then. That's the best thing I could tell you. Because finally, I just got tired of trading the dollar CAD. And I was like, screw this. I'm just going to focus on trading the crude. You know what I mean? If that's the case, I don't want to. It was moving for a while pretty good, but I don't want to trade it I don't want to trade dollar CAD as a proxy for crude right now. I don't even think it's been even reacting very well, to be honest with you. And so here's the Aussie dollar. Like I told you, this sucker, it just grinds higher, it trades in one direction. We talked about that before, and why you don't get that good two-way action. And you can look at this. I mean, yeah, the bottom fell out, but for the most part, this damn thing doesn't go nowhere. Now it did make it up here to what, the 73.60 area here. I've got 61, but it's one of the reasons why I trade the euro. I need the two-way action. And I just don't think that you get this in a lot of these other pairs. I have no interest whatsoever in trading any cross rates. Let's go take a look at gold. Oh, Ellen said, can you leave some time in the show what you think about crude? So we just covered the crude. I would not be touching crude today with the OPEC. You are putting yourself in a world of hurt. Like I said, just wait till next week. I'll be trading crude, but I'm not going to be trading until next week. But I'll be trading, pretty active. But right now, I mean, what the heck? You should be trading the euro. I mean, because you got this fantastic volatility. You've got liquidity. Man, focus on trading the euro today and kick crude to the curb. So let's go and take a look at gold. Man, I tell you what, we did make it here to the, we did the 127% extension. But man, I'll be doggone. This has really surprised me. Props to Blake and props to Sell Puts. Sell Puts was looking for 1,050, and he's been looking for 1,050, I think, for a while. This has really been surprising, and the thing here is on gold, and I was looking to, really, for a little while I was trading it, but I told you over the last couple of weeks, and especially over the last 7 or 10 days, even though we've seen some bounces here, we have not seen the good, we have not seen the good two-way action. And when I say two-way action, we talked about this, is that it's just all in one direction. So if you're on the right side of the market, you can make money, but these are 30-minute bars. These aren't 5-minute bars. And it's just like dead, moves, dead, moves, dead. I mean, it's just, and if you're on the wrong side of the market, freaking forget it. And then here, we made up to 72.10, and the market sits there. Now, we've talked about this before, like about a month or 2 months back, that gold can be very good to trade, but you have to wait for those great setups. But what's been happening lately, I just don't like the way it's been jig-jagging, and not jig-jagging in a good way. So I've left it alone for now. But like I said, I thought, and like I said, I'm wrong. I thought at least going into into December here with jewelry demand, you would see this market be able to defend some of these levels. Now I did talk about this. Here's the problem with gold, and now this is kind of scary. I was telling y'all that I don't think it's as much people hating gold as much as it's a dollar theme and why we've worked lower. Because I haven't seen too many people just hate talking gold until just in the last couple of days. But look, the dollar sells off. Here's a good example here. Now, gold's been basically trading, I think, from a dollar theme. Because like I said, I haven't seen too many people hating on gold up until the last few days. But look, it's just been south of the border. So the dollar goes and sells off, you can see here versus the euro. And look at this huge, massive rally in the euro. So this has been trading on a dollar theme story. And then look, talk about a tepid rebound. I mean, now this is actually kind of scary, to be honest with you. Because if the dollar eventually reasserts itself, well, we talked about this, that the 161% extension is 1037. So if you want to play this from the short side, or once the dollar starts to get its sea legs back, this is what I'd be targeting. The 161% retracement here at 1037. And I haven't looked at any longer term charts on gold, which I'll probably do this weekend. Take a look at some weekly charts, but this is what I'd be targeting at 1037. Once the dollar gets its sea legs back, and if you want to get short gold, I'd be looking at 1037 for a target. I think Blake's getting ready to come on, so hang on.